Well, the STX Nifty is indicating that at least on the futures we would test 12,000 today. Matter of when and not if perhaps the spot also goes there. But Prakash Diwan is joining us. Prakash, good morning. Obvious question, what do you do with Vedanta? And obviously if your shares are stuck, it will come back in a day perhaps to be available for trading. It's an F&O ban, but what's the option now?
Good morning, Anuj. So, this has really been a roller coaster, and I don't think it's yet the end of the story. I would believe the management commentary today is probably going to be setting the direction more decisively in terms of where it's headed. But in terms of an action for an investor, you get your shares back on Tuesday evening. So maybe Wednesday is when you could do something about it. But I would believe the stock would remain under pressure unless there is a decisive dividend payout, which could possibly be a way out for them to. I mean, they will have to do it because of the kind of money that they've received from Hindustan Zinc as inflows. And that's something which could probably be the only optionality or the upside that is available. But otherwise, buying it at lower levels just in the hope of something reviving at this point in time. And you remember we spoke about this briefly on Friday as well, and I said, there's no point in chasing it given the fact that it was so muddled up. So I would stay clear of it for some time till the clarity there. But today, of course, it's going to be a deep gash. And I don't think there are going to be many takers till this decisive announcement or some sort of a direction is out in the market.
Well, actually, I wanted to ask you about the IPOs. Prakash, first, good morning. Thank you for joining us. Do you track Federal Mogul? Nigel was saying this is a bit of a muddle over there. First, they do, when Carlyle, I think, wanted to exit, at that time, the price was at 600. Now they're doing an OFS at, 400 thereabouts. Do you track the stock?
Yes, so Lata, this company has had a little bit of seesaw in terms of its decision. So people aren't extremely confident about whether the minority shareholders really get their fair dues, because in fact there was a court in order that came and they had to kind of honor that buyback price and up the price, in fact, and it's something which we're not very convinced about, that the promoters are really willing to share the wealth. Today is a scenario where you have such a polarized choice, Lata. You have a company like Majesco where there's such a high degree of transparency, a willingness to kind of give out what they've gained. Whereas Federal Mogul has always tried cutting corners, and I put Vedanta also in the same bracket actually. So there are these companies which traditionally, historically haven't rewarded shareholders. So there's always a little bit of that grey area, and today, market conditions being where they are, I don't think you would want to put money into these high beta stocks where you could actually have such a huge cut if something goes wrong, given the fact that we have such better options available on the large cap side or even on the quality mid cap side. I would not advise venturing out into these names. Precisely for the simple reason that there's no anecdotal conviction that comes along with it.
Good morning. Another stock in the news is Shilpa Medicare, right? I mean, it's received a warning letter from the US FDA, but the stock has had a phenomenal run. I mean, it's doubled in 2020. Would you use the dip as a buying opportunity, or would you be cautious now?
Sonia, good morning. Yes, Shilpa Medicare has had a little bit of, again, challenges in its handling of the US FDA action. I mean, the remediation itself, which was underway, somehow didn't kind of come to a logical conclusion is what I understand. And the reason why that stock has seen such a big run-up is this whole thing of lapping up pharma, especially the one that are in these promising space, scalable, profitable, China plus, all those vectors have been working towards making Shilpa Medicare also one of the coveted names. The challenge for them is going to be standing out and scaling up so that the capex that they have incurred in the past, the ROEs, the ROCs don't actually start getting dilutive, because the moment the time run is extended, time to market, it's going to be difficult for them to justify, especially when there's so many budding stars coming out in this space. I would, to specifically answer your question, whether there's this dip is a good time to buy, I think the dip could probably be a slightly more prolonged one, given the fact that the company needs to come back with some sort of a solution to this remediation challenge, which they have not been able to honor very easily. And if that happens, you will get ample time to buy into it, probably at about 20%, 15-20% lower from where it was.
Okay, Prakash, stay on. We have more questions for you. For now, we have two big listings today. UTI Asset Management will be listing, and of course Mazagon Dock as well. But let's go across to Abhishek first for UTI Mutual Fund. Abhishek.
Well, Anuj, the 3.9 crore shares which were on offer by UTI AMC were subscribed 2.3 times only. So the offer price was about 554 crores, which indicates the size was about 2,160 crores. This was priced at a PE of 25.7 times when compared to listed peers which are trading above 35x. So the offer subscription also, was on the lower side if you compare to other, IPOs that have come in recently. What I hear from my sources is that the grey market premium may be on the lower side by about 20 rupees per share, which means that the listing could be 4 to 5% below the IPO price. One look at the valuation. Now for AMC business, the valuation is done on a basis of market cap to AUM ratio, which works out to 4.45% at the time of IPO. And if you take into consideration this grey market premium, which is at a discount of 20 rupees, it works out to 4.3% of AUM. Now this stock this AMC is trading below the peers on account of lower ROE and lower share of equity in its AUM. Back to you.
Okay, thanks a lot for that, all those details. Prakash, what's your call? Will you buy it at the dip?
This was always expected to be a bit of a stressed mobilization drive, Lata. So I would believe, I agree, the grey market does indicate a little bit of softness in the opening. But given the fact that as a portfolio, as a pick in the portfolio for a lot of large institutions who like continuity of business, annuity kind of businesses, this is definitely another good option apart from the two listed names that we have. And to be honest, the kind of resilience that this name could provide in the AMC basket is probably not yet discovered. They have so many other elements that support the resilience part in terms of revenue visibility. You have businesses, AUM, they are managing for the post office, for the defense. There's so many of these pockets which actually are not very volatile as compared to maybe a Nippon or at times even an HDFC AMC. So yes, the answer is that at lower levels you would probably buy, but this is for the long haul. So nobody is invested into this with a listing bump up, and that probably turns out to be true. But I think it will get support closer to the offer price of 554 and probably stay there or probably even slightly more eventually in the next couple of days. But I definitely believe it's a good long-term pick. HNIs haven't been interested, which is fine. The mood in the market is evident enough for much more faster moving and more high beta kind of names in the IPO market as well. But UTI would be one of those steady compounders that will be featuring well in the institutional basket.
Okay, perhaps a better listing would be the government-owned Mazagon Dock shipbuilders that list today. It had a really strong subscription. Agam is here to give us more details on all of this. Agam, over to you.
Oh, well, it's been a strong response to this one, to say the least. This is, of course, the government-owned defense company which focuses on warships and submarines and building them. Of course, the objective was disinvestment, in which the government sold about 15% stake. It's been issued at 145 rupees per share. The issue size is around 444 crores. Its subscription stood at 157 times. And out of this, the retail portion was also at around 35 times. So there's no doubt of the fact that there has been a very strong response. What did investors like? Well, the large order book of around 54,000 crores and this is indicative of around good visibility for the next 6 to 7 years for the company. Moreover, of course, it's an oligopolistic market considering it's a defense and there are very few players in there. There are, however, a few concerns about slowing revenues of late, and of course COVID weighing down on the execution. But in terms of valuations, that perhaps is the clincher here, because at FY20 it's going in at around 6 times as compared to its other peer, which is also in defense, that's Garden Reach Shipbuilders, also government owned, that's going at around 15.2 times. And of course Cochin Shipyard is also at around 6.9 times. So it's certainly at a significant discount to its peers, which is why we're likely to see a premium as far as Mazagon Dock is concerned.
Okay, thank you very much for joining us, Agam. We don't have time to go to Prakash just yet because it's time we invited the technical experts, but it's just that it is Mazagon Docks in English. The area where they are in Marathi is called Mazagon. We are, I think, confusing the pronunciation, but more on that later. First, the technical advisors in just a minute after the break.